Welcome to Business Talk, our weekly University of Rio Grande OSU South Center's podcast show. We are here at the University of Rio Grande's TV studio. Not only are we doing live internet radio through Blog Talk Radio, but we are also live on the Jackson Educational Access Channel and Channel 17 University of Rio Grande TV channel. Our podcasts are archived and placed on YouTube for viewing and listening again and again. Our mission here is quite simple: to promote the University of Rio Grande and its diverse educational programs, to promote the Ohio State University South Centers and its many business technology programs, promote small business and its supporting organizations, and finally, promote Southern Ohio, a great place to live, learn, and enjoy life to the fullest. Our co-hosts today are myself, Jason Winters, Director of the Center for Small Business Entrepreneurship. Missing today is Mike Thompson, Instructional Design and Media Services Director.
Yeah, and he is, Jason, just want to let you know that he is swimming the English Channel today.
Well, that is absolutely no excuse, because we are running around like chickens with our heads cut off trying to figure out how all this technology works. So, Mike, if you're in the English Channel, I hope it's cold. Also with us today, Patrick Dingle, Business Development Specialist with the Ohio State University South Centers. And also missing today is MBA student Nate Walzer, our other co-host.
He is actually at a soccer meet, and he promised us that their team would win.
Again, is he at the women's soccer meet?
Let's assume everything. I'm not sure.
I bet it is. He's got his eye on something else. Well, anyway, this week we are featuring one of my friends and colleagues, Dr. John Hill. John is an associate professor here at the University of Rio Grande, and today we will be discussing stocks, mutual funds, options, derivatives, commodities, futures, and hedge and speculations. John, welcome to Business Talk.
Thank you. Good to be here.
John, why don't you tell us a little bit about yourself?
I've been a faculty member for the last 6-7 years. I teach business law, investments, which we'll talk about, and management. There's some other courses, but that's the primary the goals. I teach both at Rio Grande in the main campus, in Vinton and Meigs counties.
So, John, how long have you been with the University of Rio Grande?
I'm going on 20 years. Prior to that, I was Director of Financial Aid for several years.
So you come with a lot of different experiences.
I have aged.
And before you were part of the University of Rio Grande, what were you doing?
I've been a Director of Financial Aid in 7 different institutions, so it's primarily been higher ed administration, Jason, and a lot of experience there with different size institutions, different types of institutions, but Rio Grande has kind of been my home.
But you also retired from the military, didn't you, John?
I had 28 years as a Navy intelligence officer. That was a situation where it was a love, passion, and hopefully that will pay off in terms of retirement benefits and some of the other things that I'll enjoy.
Speaking of those other things that you enjoy, don't you have a little place in someplace up north?
Wisconsin is my heart and my home, and we have a lake home up there that basically provides our summer entertainment.
Now, John, coming from Ohio State University, and both Jason and I have a very rich history with the love of the Buckeyes. Who do you root for when the Buckeyes play the Badgers?
The Badgers. I have to be honest, I've been a Badger fan all the way through high school, and probably will continue even win or lose.
Well, that's good to hear.
It is.
So can we actually say cheesehead?
We would favor you by doing that. So we'll bring you some cheese heads that you can put on your head as you go to the games.
Hey, and also, you're very much of a Navy fan.
Yes. I have had a long-time relationship recruiting the Naval Academy students, about 18 years total. So we went to the Naval Academy for refresher courses, and we saw all the way from the superintendent all the way down to the athletic directors. So it's a long-standing Navy blue and gold.
I know that your room here at the University of Rio Grande is either has naval kinds of pictures or Wisconsin kinds of pictures, or your lovely wife. She has stuck with you through thick and thin.
That's true. She started out as a carrier pilot. That didn't work out. Now is a very senior old man with naval intelligence.
I think that's great. How did you get involved in the financial understanding, the direction, the fact that you teach many different level classes here at the University of Rio Grande? How did you get involved?
Pat, I was an economics major at an Iowa institution, so it's been kind of my passion in terms of the stock market, the investments, and that kind of subject matter. So I taught part-time even when I was a director of financial aid and saddled with administrative responsibilities.
I know that Jason, who's the director here at the small business entrepreneurship, he's a firm believer in small businesses because all of his life he has experienced being an educator and a business owner, etc. And all of us need to learn more about the financial kinds of things. Jason, I know that in your particular classwork, one of the legs that an individual small business has to stand on is financial.
Oh, absolutely, Pat. One of the hardest things to get through to new students, not necessarily small businesses, but I'm sure it applies there too, but the idea of grasping what your expenses really are. What are your startup costs? When they figure out how much they're actually going to have to invest, they usually find that they are way short of what they need to start a business. So finance comes into play, and then a lot of people, when they get down to the idea that, hey, I'm midlife, and now it's time to retire, what happened to that nest egg? We all expected to have this great big nest egg to fall back on, and sometimes we fall a little short.
Well, as Jeff Foxworthy says, some of the rednecks, you know what their retirement plan is?
I don't know, Pat, but I'm sure you're going to tell us.
Lottery tickets.
Lots of them.
Lots of them. So John, what are some? Let's talk about the retirement and the investments and things of that nature.
I talk to my students, Pat, about a situation where what are you going to do after you get your last paycheck? And that's a situation that comes too quickly. So proper planning, that's pretty much a miss in terms of the young people. The discernible income levels are low, so you got to have proper planning right out of the start in order to finish strong. We also talk about what happens when there's an inheritance, a large amount of money that transfers hands. How are you going to handle that? Or are you going to have financial advisors come in and basically hire a hired gun? I would hope that individuals care more about the individual nest egg than anybody else. So we recommend that the students take it step by step, figure out what appeals to them, the risk that is taken in the younger years, recovering with lots of time to recover. Those who are retired have less options or choices. A situation where basically they're on a fixed income. We can talk about what that is and what the implications are. How they would treat that. They need to have their needs provided for food, shelter, and the basic needs. So there's a gamut of choices, risk ratios, formulas, resources, and that's what I'd like to cover with the listeners today.
Yeah. Let's start with stocks and bonds and mutual funds. You know, we older people are hit with all these different terms. Do you have any way to just sort of talk a little bit about, you know, what those all?
And maybe you should go back to basics, because there may be some of our listeners that do not even know what a stock is.
Let's talk about shares or stocks that represent ownership. Each share has a certain value. It may be Bob Evans Farms Incorporated shares. There's a tradable value. There's a liquid market. And we can either sell or buy or trade whatever we want to in terms of shares of stock. We also have the opportunity to leverage through derivatives, meaning that if it's Bob Evans shares and we have 100 of them, we can trade options on that derivative issue in Bob Evans shares. More speculative, we can trade options with hedges. Some of the other financial tools, if you want to call them that, to express the risk-reward ratios in the proper sequence as to age. That's a big trick. But we've got lots of resources, both free and otherwise, that we can employ for the individual investor to ferret out what he or she is interested in, what kind of risk tolerance, how much remaining life in terms of investment life, and what the end goal is. Maybe it's to bequeath a church or a foundation. So there's lots of tools, lots of choices, but that means homework. It means dedicated effort to get it right the first time, and if you don't get it right the first time, quickly change course and get it right the second time.
Well, help me to understand. Let's suppose that, as the listeners know, Jason owns several different parts, and on his farm he owns goats. So let's just suppose Jason comes to me and says, Pat, how about he sells me 10 shares or stocks in the goats.
Now, before you answer that, John, keep in mind that I'm a sole proprietorship, and explain how that impacts shares.
Okay? You got it all. Good, bad, and ugly.
Mainly ugly.
Right. So the shares are basically like a veil or a hedge. If I invest in shares of, let's say, Bob Evans as an example, they're not going to sue me if Bob Evans has a legal problem. So there's kind of a veil of protection as to if I invest in stocks, publicly traded stocks, I'm protected if I can only lose as much as I have bought. I can't lose legal fees and be sued to the point where I no longer have a career. So in terms of investing, the idea is to buy low and sell high.
So in other words, if Jason says he's going to sell me 10 shares at $10 a share.
Right.
So I purchase those. I give him $10 per share, 10 shares for $100.
Okay.
And then maybe sometime down the line, I want to sell those back to Jason. Or maybe you want to buy them.
Right. And we can do that on an exchange. There are certain restrictions as to transferring the shares, the value, how that's quoted, how that's reported to Jason's equity account. Basically, it's an easy thing because the SEC, or Securities and Exchange Commission, sets it up to make it easy. the broker may be full service, where Jason might need some advice for a fee, or maybe he's on his own. So we would go internet-based, discount brokers, so that there's less fees involved in making those trades. A whole host of choices. And usually the younger folks haven't fully digested what the choices are, and will do that just basically out of interest. If you have an endowment, if you have an inheritance, if you have a death in the family that needs to be passed on in terms of values of equities or commodities or whatever, there are ways to do that in an organized, full market sense. We can get it done today if we need to do it today.
I see.
Where you don't have to contact somebody as to, would you like to buy my shares of whatever the issue is?
I see. So what's the difference between, let's just suppose I'm setting up my retirement, and should I get stocks, mutual funds? Should I get gold? Should I just say, the heck with this, I'm not going to bother anyone, I'll just do the day trading?
Pat, for you, as a compliment, I would suggest that you probably hire a financial advisor, because you're going to have all kinds of money as Ohio State University comes to you with retirement funds, and you'll need that help. And for a fee, that advisor will help your goals, your age, your risk tolerance, all of those kinds of things. It's probably a fair price to pay if you've not done your homework. Otherwise, go for it. Know something that you touch. Jason has been an entrepreneur in several different areas. He probably knows companies and can identify with the good, the bad, and the ugly. Pat, Ohio State University, Buckeyes, not so much. You're probably going to have some advice for a fee. That's not a slam. That's basically do what you got to do to buy low and sell high.
Hey, we have a listener on the chat line.
Mm-hmm.
And a couple of comments that she said, day trading, no. And she has heard there is money in frozen pork bellies. And could you
You would lead out with pork bellies and a definition of that first and foremost.
What is a pork belly?
Pork belly.
I think he's commenting on the weight that I have gained
Yeah,
because of my surgery.
Yeah.
Yes.
A pork belly is a commodity. It's a live animal that has been killed.
So it's not a live animal.
Not anymore.
Okay.
But we want to do the bacon. We want to do maybe even the tallow or the fat. And that has a value, and it can be traded on a commodity market, just like stocks and all of the other kinds of derivatives. We would have hedging. Somebody would be processing bacon or pork bellies to make money by processing bacon. So if the price goes up, we can hedge that through a lock-in, if you will, of the price of bacon for a specified time, and we can convert that to a delivery date. We may need bacon in the winter. So we have the opportunity at that point to buy a futures contract that will deliver so many pounds of bacon. It's specified by the exchange. The quality will be determined, must be met or exceeded, and at that point, we buy the bacon. We're a hedger.
So
versus a speculator. A speculator wants to buy low and sell high.
So if we can estimate that the weather has been very hot this year, the drought conditions have been widespread across the country, we are anticipating that the corn crops are going to be few and far between, so the price of corn is going to go up. So we can anticipate that the future of those pork bellies are going to go up with the price of corn to feed those animals?
Maybe not immediately, Jason.
Okay.
If we talk about the crops being a problem with the drought, and the livestock not being able to support those animals,
Yeah.
they're going to dump that into the market. So temporarily, the price of livestock, whether it be pork or beef or whatever, is going to go down because the market is glutted.
Because supply is up.
Yep. But eventually that's going to work its way out, and the prices will go up for Kroger and consumers and the homeowners and all of the other kinds of issues because it's supply and demand. And if that changes and changes drastically, well, think about the gasoline. That's a commodity. Mm-hmm. If gasoline goes up because of events in the Middle East, we're going to pay that in terms of either hedging for a time. You can only do that for so long before you execute the contracts. Or we're going to be paying the price. And transportation is not cheap already. If it goes $1 higher, $2 higher, people are going to change their mode of transportation, education, economics. It has a widespread economic impact with what the markets are doing. So you have the health of the markets. We're going to know right away that that drought will have consequences for the price of beef or corn or
political elections.
Well, that could be a situation as to the tax base. There are decisions being made as we speak, not next fall, but right now as to what you're going to plant. It's supply and demand. But we can kind of hedge that bet as to we're going to take out a contract for delivery on a certain date that will allow us to keep our grain elevator operating, or farmers having foodstuffs to make money, not to go out of business making farm business. Sure. So it's all tied to the worldwide economy. When we talk about the disasters of the tsunami and some of the other kinds of things, it all comes home to roost, supply and demand. The markets are always right and never wrong, and they can anticipate in short term. If we have political strife, that oil base is going to change immediately because there's no oil going through the Straits of Hormuz. It comes home to roost very quickly, and that's marked every day, every working day by the markets, starting at 9:30 in the morning till 4 o'clock every night.
Here's a question on the chat line. With the new European bailouts, do you think buying very low in, let's say, a Greek bank would have potential?
Oh my.
I would answer that risk has its reward. And it's already being demonstrated in the rates of return on bonds for the Greeks, the Spanish, French, and the European Union. You've got to pay more because the risk is higher. So in answer to the caller's question, it's going to depend on your risk tolerance, and it could all go bust. The reason I say that is if a bailout is promised but not kept, the markets are going to react very quickly to a higher rate of bond return than ever before, maybe ever in history. You can't afford it, but you are forced to take that risk because that may be the only game in town. That's not the game that you want to play as a prudent investor.
So what is the difference between the bonds and the hedging?
Well, we've got
futures.
We've got yield for the bonds. That's the indicator as what we're going to get for what we pay, what we're going to trade with dollars for yield over time. The hedgers are primarily the commodities, and that we need to have a stable grain flow, a stable dollar flow. We can trade in those commodities. Gold, that may be a precious medium for exchange, but for the long term, people use gold. They mine gold. They speculate on gold. And they hedge on gold. So there's a lot of different aspects there that fits the process of hedging and limiting the variances. That's really the
John, also with gold, don't you see a lot of people call that a safe haven?
It would be a flight to safety. which is what we're having right now in this Middle East turmoil. The sovereign wealth funds, the kings, the nations are hopefully going to trade for risk in a riskless society. Gold for eons of time have been the measure of stability.
Sure.
So when it becomes unstable, the flight to safety converts whatever commodity or equity into pure gold. And that's basically Fort Knox.
I have another question from a listener. Can a person's Roth IRA be used to pay for her son's college education without capital appreciation tax or penalties? And she is nowhere near 59 and a half.
Oh, well, if we're talking about Roth IRA, that's a different thing than the traditional IRA. And I would defer at that point that probably if you're that young or that long before you retire, probably don't want to touch it because you can't get it back. You can't come out and then go back in a tax-sheltered annuity or a tax-sheltered vehicle. So my suggestion is if there's any other way to afford an education, you probably want to have your Roth IRA stay put. That's kind of a general guidance. It doesn't always hold true. Maybe there are emergencies. But if you have a taxable shelter, you don't want to lose it. Short answer.
John, drawing on your past experience with financial aid for universities, what might be some of the paths that she could look at for financing her son's education?
I would say start slow, average long, meaning many years, build it up, and don't try to do a home run right out of the bat. Be conservative, because you're going to need that for retirement. You're going to need that for educational expenses. And while that's a pat answer, you basically need to know what you're doing. And in order to do that, you need to have research, your own research. There are free research sources that we've talked about already. It's paying the price of prudence.
Well, some individuals have acquired, they've gone to your classes and they've gone to other financial advisor classes.
I like to think I was a help rather than a hindrance, but okay.
And so consequently, when we sit down and we look at how easy it is to do some of the financial transactions over the internet, etc., what are a caution that you want to give on that?
Do your research, especially if it's free. If you don't know what a mutual fund is and want to be in the management position or the purchasing position, find out about that. It's a disclaimer that basically is very important to know. And if you're wanting to invest in it, risk has its reward.
Okay. All right. We have about 90 seconds. I know all the different topical areas that you wanted to discuss.
I think we did one or two.
You have 60 seconds to get the rest of it in, or you can come back.
I would go to the internet resources that I mentioned before, Pat. Investors Business Daily is not a free resource, but it's well worth it. I like particularly Value Line Investment Survey that's available in public libraries. There's Morningstar, which narrows into the mutual fund areas. Again, just as a synopsis, do the research, use the free sources, use your head.
Okay. John, we do hope that you come back.
Yes, and I can't wait until Saturday. I know John is anxious to watch the Buckeyes play.
Always.
And who's gonna win, John?
United States Naval Academy, first and foremost.
I won't argue with you there.
There you go.
Thank you again, John.
Thank you. Good to be with you.
I'm Patrick.
And I'm Jason.
I'm John.
And we thank you for listening to our program on Blog Talk Radio, Business Talk with Pat Dingle and Jason Winters. Thank you for listening.